Yo, what's up you guys? Welcome back to another video. And in today's video we are going to do the usual weekly market breakdown, where we do take a look at the market from a technical as well as a fundamental perspective, and then look for the best probability setup that we can find there as well. Today we're going to take a look at the dollar index, gold, Dow Jones, the Nasdaq, as well as the GER30 there as well, both from a technical and a fundamental perspective. Now, the first thing we are going to take a look at is fundamental data. Now, fundamental data obviously gives us an overview of the current state of the economy and how well they're doing through the data that gets released. So we first had on Tuesday was the flash manufacturing PMI, which is the purchasing managers index. And for data like this, you're normally looking for anything above a 50. Anything below a 50 so some cracks in the wall, and we can see the flash manufacturing PMI came through at 48.5. Flash services was still above 55, higher than the investor sentiment anticipated. We also had the FOMC meeting minutes. Something that stood out there was that the Feds were less confident if they should go ahead and hike interest rates still or not. Apart from that, it was more like a 50-50. You can see it says here Feds officials were divided at the last meeting. So half of them was like, we should do it. The other half was like, maybe we should just go lower. But it says here, with some members seeing the need of more increases, others expected a slowdown in growth. This is obviously with the fire that's being made with the whole debt ceiling story, and that is also due to happen on the 1st of June, which is basically next week. It says here, though the decision to increase the Fed's benchmark rate or interest rate by 0.25%, which is 0.25, was unanimous, the meeting summary reflected a disagreement over what the next move should be, with a tilt towards less aggressive policy there as well. Now, the Feds are basically in a very tight situation at the moment, because they're currently taking on a lot, because with this whole debt ceiling story, and now they're also tied in between of whether they should not, because inflation is still high, it's not low, but now they're still in that thinking process of whether they should hurt the US economy more, if they should just not leave it. It says here, while the future expectations differed, there appeared to be strong agreement that a path in which the Fed has hiked rates 10 times for a total of 5% points since March 2020 is no longer certain. So a lot of uncertainty in the market based, if you see uncertainty through a Federal Reserve perspective, then that basically means you can expect a weaker dollar. Now, we obviously saw some very bullish momentum with the stock market, and that didn't come anything to do with the dollar. It basically because the Nvidia posted some very good data, and again, these are the kind of things that one cannot forecast for, because this data isn't made available to the public until it's released. So you can never go and say, oh, I think that Nvidia might post some positive data, until they actually post the data, because there's no information made available to the public for you to go and read about, that you could potentially make that you can put in your 2 cents and say, I think this is going to happen. This article from CNBC says the S&P 500 and the Nasdaq jump as Nvidia fuels tech rally there as well. It says here the S&P 500 and the Nasdaq jumped Thursday as investors cheered the latest quarterly results from Nvidia. Now, the reason why the Dow Jones didn't react to it, because Dow Jones mostly focuses on industrial companies. These companies, they basically focus on on the tech sectors in the business, which is why when Nvidia came out, like, yeah, we sold all these graphic cards, and and then the market basically reacted to it there as well. But look, based off where I am, we've got tomorrow we got some core PC index, and next month next week we've got a roller coaster of a week there for the index, because we've got the deadline for the debt ceiling. We also have the NFP data that's coming through there as well. I do expect the index now, because it had reached this level that I've been speaking about, the completion of this information to the neckline, I do expect a U-turn from exactly where the market is now. But let's jump straight into the information. Firstly, what we have over here, we can see here. Firstly, if you look left over here, this is from a weekly perspective. The market printed support, broke below support, tested resistance, then came down. Came back to test all of that resistance, broke above that resistance, tested it as support. Support did not hold. The market's back to test that level as resistance. Now you could see this as a massive head and shoulders pattern, because we have the equal low, got a left shoulder, we got a potential right shoulder, and this is normally a bearish pattern from a technical perspective. Apart from that, we have this massive impulse. After an impulse, you expect a correction, right? So we got the correction, and if you take your Fibonacci from the high to the low over here, you can see we are at the 0.78 at the 0.786. If we do get a clear weekly break above this level, then we can definitely expect the bullish market momentum to continue. However, like I said, I do expect a correction. We have another impulse to the upside, and you normally expect a pullback to at least the 0.382. And if you take your Fibonacci from the low to the high here, you can see we do have the 61.8 that's lining up perfectly with this previous level of resistance that got broken, that is now turned support. If we drop down on the daily time frame, what do we have here? Now, from a daily perspective, we have multiple structures that the market is currently faced with. First, we have support here that got broken, it turned resistance. We got resistance that got broken, that is now turned support. Now, like I said before, I definitely expect a U-turn from the index, basically from where it is now, and we could potentially see that a very aggressive pullback from the core PCE data for the index tomorrow, and then from there we can obviously just monitor the price action and see what kind of data we have coming out next week there as well. Next up, we do have gold. Now, gold is currently faced with a very strong level of support. Now, from here we obviously expect a correction on the daily time frame. Here on the weekly, what we have over here is, so obviously got a market also now that I just completed an overextended information, and after an overextended information, you expect to pull back to the left leg before a continuation to the downside. What we have over here is we got a market that printed a level of the resistance here, broke above resistance, tested it as support, printed this information. After the information, you expect to pull back to the neckline before that continuation to the downside. But what I do expect is a slight bullish correction on the on gold to at least the 0.382. As you can see over here, the 0.382 doesn't only line up with the neckline of the information, but it's also the previous level of support that got broken, that is now turned resistance. Now, if we go down on the daily time frame, what do we see over here? Now, from a daily perspective, we can obviously see that this was the level that the market had broken below. And if you remember the last breakdown I did, I explained to you guys exactly why I'm expecting the market to continue lower from that level, because we had a breaker structure. However, I also said we could potentially have seen that move to the upside there as well. Now, like I said before, I do expect gold to continue higher from exactly where it is now, and then from there we can obviously once again monitor the price action. However, there's one thing that you need to keep in mind, that here on the daily time frame, so what we have over here is on the weekly time frame, we've got an information is traded to the neckline, and then we have an overextended information on the daily, which is traded to the left leg. So as traders, we have to be reactive and not predictive, and we need to always learn to just go as the market moves. I would say that monitor the price once it gets here. If you want to continue further, wait for a break above this level of support. That would then be turned resistance once it's broken there as well. Next up, we've got the Dow Jones. Dow Jones, similar price action to gold over here. If you look left, you can obviously see that we had this massive impulse and we had that correction. Also, if you take your Fibonacci from the high to the low of the massive impulse, I do expect the USDX to pull back to that level, and then from there we can obviously once again monitor the price action, and this could potentially take place between now and tomorrow there as well. The Nasdaq obviously at the better end of the stick, okay, because of the data that got released. I do expect the Nasdaq obviously now to basically continue higher, but in order for that to happen, we need to get a clear daily close of this current candle. So if this current candle does close bullish daily above the structural level resistance, it would then be turned support, then basically on the retest, or just buy it as the market opens. You can definitely ride this wave to the upside for the market to go and hit at least 14,100, or is it Yeah. Okay, next up we got the GER30. Now GER30 obviously has been very bullish, buyer bullish, bullish. And then obviously the market got faced with resistance. No questions asked, right? So basically what we got here is we can firstly see how the market had obviously broken above this level of resistance, came back, tested it as support, and this is now on the weekly time frame. We obviously expect that continuation to the upside, but the market could go either way there as well. Now, what we have over here firstly is we can see we have a market that's currently testing a strong level of support. Market also printed an impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, we also have this level of resistance that got broken, came to test it as support. Support did not hold. The market broke below support. All of that support is now turned resistance, and we do have a 50% Fibonacci level that's lining up perfectly with that structure. A 50% Fibonacci level basically gives us an indication that we are about 50% pullback of the current impulse. Now that is it from my side, guys, from a technical perspective. Please let me know down in your Please let me know what your thoughts are, if you have a different bias on this as well. Also, I will probably have to redo that poll that I did of the pairs. So if there's any pairs that you want me to break down, drop it down in the comment section below, because obviously tried to record those videos there as well. Yesterday couldn't do it. ESCOM load setting from 2 until 8:30. So that is it from my side, guys. Also, if you enjoyed the video, please smash the like button also, and if you are interested in the funding account past services, I will leave a link in the comment section below there as well. Thank you for your time, and as always, stay good. Cheers, videos.